Well, good morning, TradeStation Nation, and welcome to our Friday morning market briefing. Today is January 12th, 2018. Our presenter this morning is Mr. Sam Seiden of OTA. There is a number of things that we are waiting on today. The U.S. is going to confirm the low-inflation spurred rally that boasts many strong foundations. The headline inflation growth number is expected to have eased to an annual pace of 2.1%, with the core rate staying at 1.7%. The release comes after wholesale prices incurred their first drop in more than a year back in December, down 0.1% on the month. Outgoing New York Federal Reserve President William Dudley said yesterday that expansionary fiscal policy and loose financial conditions raise the risk of economic overheating, dubbing 3 interest rate increases in 2018 as a good projection. That's as far as he's concerned. Oil traded near a 2.5-year high of $70 a barrel in London, driven by production cuts, rising demand, and falling U.S. inventories. The rally is adding fresh legs to the melt-up in U.S. stocks, which rose to new records on the close. All 4 major market indexes in the United States, the Dow, the S&P 500, the NASDAQ, and the Russell, all closed in the green yesterday. The top performers in the S&P 500 were among Viacom, Anadarko Petroleum, Mylan, and Discovery Communications. So an all-star cast of industry leaders. Today we will be spurred by some earnings news. BlackRock, JP Morgan Chase, Wells Fargo, PNC Financial Services all report earnings today. As mentioned, the December Consumer Price Index is expected to rise 0.2%. Also in the news today, President Trump undergoes his first formal physical examination since taking office, and that has been in the news for a while. Now, overnight, the MSCI Asia Pacific Index gained 0.3%. Topics Index in Japan closed a bit lower at 0.6%. In Europe, the Stoxx 600 index was up slightly, 0.2% at 5:55 Eastern Time. Remember that everything we talk about here at the Morning Market Briefing is for educational purposes only. All the symbols and all the trading ideas that we discuss are for demonstration purposes. They're not recommendations. The presentation is not an offer or a solicitation of any kind, any place where a TradeStation affiliate is not authorized to do business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk. It may not be suitable for you. Please take a look at the disclosure information posted in the chat panel for your reading enjoyment at your convenience regarding the characteristics and risks of various asset classes that we trade here at TradeStation. Now, our presenter today is no stranger. He's here every Friday as the Chief Education Products and Services Officer at Online Trading Academy. Sam Seiden brings decades of market experience to us for the morning briefing. I want to turn things over to Sam right now so that we can get started with our big day, the morning market briefing. Oh, one thing, folks. Monday is a market holiday. This upcoming Monday is the Martin Luther King holiday, and there will be no morning market briefing. So let's have a great 3-day weekend. Get off to a really good start with Sam Seiden this morning. Thank you, Sam.
All right, you should be able to see the screen. We are looking at TradeStation. Thomas, TradeStation should be fine, and you should be able to hear okay. Let's jump in and get started. Number of opportunities to look at today. As always, let's start with the dollar. Dollar, as expected, continues to fall and is approaching our target of 90. It's a little bit above 90. If I go to, let's look at this view of the dollar right here. And it's important that you realize how close we are to that. So here's our level. This is our target from the 103.40, about 90.5. So there's that. If and when prices get there, we'll want to look at other markets. For example, like the euro is hitting a. If you look at the daily chart of the euro, this is a level we've been looking at for quite a while here on the TradeStation sessions. We've gotten close a couple times. With the dollar now falling, the euro has now entered, finally just touched the very bottom of this supply zone right here, found on the daily chart. Okay, so as a long-term trader, short-term trader, that's important information. Also notice on the small time frames, we have plenty of room below. Okay, even down to your 5-minute chart. So, for example, knowing where you're at in that larger time frame supply with the euro, in that dollar demand, we can short pullbacks to small time frame supply zones in the euro and other currencies. We'll look at the Australian dollar next. Now, when you say 2 points, John, I don't know if you mean like 2 points in the NASDAQ or 2 ticks in the currencies, which is extremely tight. Okay, yeah, so you should be able to find plenty of opportunities, today, Sunday, into next week, Monday, Tuesday, to play around this level, right? Again, dollar hearing to larger time frame demand in markets like the euro and others at or close to larger time frame supply. One that will line up with the dollar level a little bit better is this euro. There is the Aussie dollar. Okay, so you can see this one kind of has a gap with it. This one is also on the daily. So if the dollar falls a little bit more and gets closer to that 90.5 level, that'll push the Aussie dollar up close to this area here, where we would expect a pretty significant turn in price. So watch the Aussie dollar. And again, I'm not suggesting that you trade all these just off of the daily charts, which is where we see these areas. But you can go to smaller time frames, and now all of a sudden your day trading becomes very high probability, and your profit zones are nice and big. Does that make sense? Okay, so we'll keep an eye on that. Other markets like oil. We'll come back to the NASDAQ in just a moment. Looking at oil on a smaller time frame, I want to point your attention to um, a trading opportunity here that looks really good. So here we have a supply zone. When you utilize our odds enhancer scoring system, this level looks really good. Okay, this one scores out really high. One of the reasons why it scores out high is not, there's always two things, right? There's structure of the level, and then there's profit zone. We'd be looking at a profit zone down to this little level right here. And of course, whatever the available profit zone is, we always want to look to take less than that. This is certainly a trading opportunity that could meet entry today. Nice, Michael. Well done. So whether the Aussie dollar hits demand first or supply first, ideally your target should be somewhere before that opposing level, not at the opposing level, but somewhere before the opposing level. Okay. So for oil, this supply zone comes in around 64.20. And on the downside, we're looking at 62.70. Okay, so watch for those. We're right in the middle now. So I'm not going to spend any more time here. But just know that in the larger time frame, the reason you're seeing oil the last 3 days not go anywhere, right? Because it's been on a big, it's been really moving. The last 3 days it hasn't gone anywhere because we've hit a little pocket of supply up here. Doesn't mean that this is it for oil and you're going to see it free fall now. There's demand zones below, but that's why you're seeing this here. So it's important to know that taking these short time frame trades as well. Let's go over to some of the equity index markets. Here's this is an opportunity we pointed out at TradeStation. If anybody took this level in the DAX, well done. Um, if you're in this position still, got a couple emails, I would just stick with it. No reason to change anything. Just I would stick with it. You have a nice big profit zone there. You have a great entry right at the turn, which is low risk. And yeah, we'll leave that one alone. Let's pop over to the NASDAQ. All right. So for the NASDAQ, let's start right here. Now, obviously, the NASDAQ was able to fall like it did because there was nothing to stop it, right? This drop right here. Remember, this stuff is not demand, right? This is the picture of filled orders, not unfilled orders. Prices move very quickly through those areas where orders are filled, and they stop and turn at price points where you have unfilled orders. So we already have, proof that there are some unfilled buy orders here. Prices stopped falling and rallied a good 10 points. So what we want to do then is get fairly excited about the next level below it, which is this one right here. And believe me, this one's very reachable. It may look like it's far from current price now. Actually, it doesn't look like it's far. So we'd be looking for a bounce from this level simply because the profit zone on the upside, it's okay, but not great. So here I'd be looking to enter a position at the level, the stop below level. This comes in at 66.91 down to about 84, and then you need to stop ideally just below 81. So that's for a lot of people that's a fairly big stop. If it's too big, just don't take it. You'll have there's smaller time frame stuff to look at also. For example, if we go down here, um, believe me, it's nothing for the Nasdaq to rally up, and if it rallies up into here, this price, which is for short-term traders that are looking to take on very little risk, this is a very ideal opportunity. Shorting the market at 67.30 and a half. And, with a stop at 30, about 35 and a half. So that's about 5 points of risk or $100 per contract in the NASDAQ. Okay. And then your profit zone for here would be all the way down to the 67.05 low. So we would take a portion of that. Ideally, probably about, I would go with 67.09, right, before you get to all this. Let's just put that in right here. So there's that one. And I'll put a red line in for the stop, and then we'll move on. Okay. So there's that one. Yeah, we can look at the S&P. Oops, sorry about that. I was just chatting away. I don't know what the last thing you heard me say was. Um, so we were just talking about the S&P. Again, I don't know where I got cut off. Sorry about that. I just happened to look at the chat and saw you guys saying I was disconnected. Yeah, so we moved over to the S&P. I said, we're not going to spend much time here because there's not a whole lot to do. But yeah, so let me just back up a little bit then. Hopefully we finished with the Nasdaq, but we got the whole trade set up in there. We got the entry, stop, target. That was up in here. That's this one. All right. And then the S&P. We're moving over here, and I suggest that there's not a whole lot to do here at the moment. But then, and I pointed out this level, it said, this is at like 59, market's at 73. Let's not spend much time here because it's pretty far. But I said, hang on a second. If you think about it, what uh, what nobody expects to happen is almost what always happens. And then I was just suggesting that if you think about it, that's almost always the case in the markets. But if you want to understand the logic behind that, if you really understand the impact or effect of actual buying and selling in the market, you'll also understand why what most people don't expect is going to happen almost always happens because it has to. So it doesn't look like so if and when prices reach the 59, then that means they will have gotten through this 64, right? If that happens, then it's possible that there's a supply zone left at the 64 area. Thanks. Huh. That's weird. Not sure why that's happening. TradeStation seems to be fine. I'm not losing connection with TradeStation. It's odd. All right. Well, let's keep going here. Sure. We can take a look at natural gas. Is there a special level that you're looking at for natural gas or an opportunity you're thinking of? Don't forget on natural gas, it recently just rallied right off of those demand zones we had down there. So, but let's take a look. Well, I'm sure you're typing something, but let's take a look in the meantime. Okay. Um, yeah, I mean, in the bigger picture, the profit zones look good. Remember, we were expecting this one to rally quite a bit. Okay. You're coming into recent highs or prior highs in natural gas, but they're really not supply zones. I mean, yeah, it's no, I'd expect a pullback from here, but above that, the next move is probably up into here. Right? All these tops over here, price should have no problem going through those. So the next fresh supply zone is right up here. But again, here's a supply zone that we're falling from today. Smaller time frame, we do have some demand zones to buy against. Okay, here's one. Looks like we almost hit this, and then these below. So yeah, overall it looks bullish. You have some fresh demand zones below. Fresh supply is quite a bit higher. Let's go back and look at our. Yes, we covered oil, the dollar, NASDAQ, Euro, Aussie dollar, and the DAX. Now, if you have another market you want me to look at that we didn't cover, I can certainly do that. Gold, yeah, let's look at gold. So you can see gold is coming off of this is a level we've had in here for quite a while. This supply zone up here. Gold just hit this level earlier this morning, not that long ago. But take a look. What's sitting just below are just a ton of filled orders. So price could come down to 1305. That's a pretty big move. Let's go to the smaller time frames and see what we have. So yeah, on the smaller time frames, price might get hung up around.
Thanks, everybody, for your time this morning. And as Linda said, at least Sam managed to be here for a while, and we're always thankful for that. We do have a 3-day weekend ahead of us for equity markets. As you know, Monday in the U.S. is going to be a holiday, and so there will be no morning market briefing. We won't be hearing from John Person on Monday for the morning market briefing, but we'll be back on Tuesday. I want to thank you for your patience this morning. Hopefully it was helpful. We'll see you later. We always appreciate your time here at the morning market briefing.